Now, Dayo, you know, you're here to give us a slightly different perspective of how the market performed from an investor or fund manager's perspective. So tell me, the market performance today was quite low. How does this tie to the recent announcement that the SEC is planning to replace its board, of course, amidst internal squabbles in that organization?
Well, I can't draw a direct correlation to it because right from the start of the year, the market has been up and down. The news coming out about SEC rejigging its board, it's pretty much until it's finally concluded. Now it goes a long way to just determining how serious are we about reforming the market, reshaping the market. But at the moment, the straight answer to your question is just too early to draw a correlation.
No, why I asked this, Dayo, is because the last time you were here, you did say that you're seeing investor confidence increasing as a result of a bolder regulatory stand. Now, so with this controversy we're seeing now, how is this impacting this confidence that you've seen increasing? I mean, you look at the trends, don't you? Yeah,
I did mention about having bolder regulatory stance, but bolder regulatory stance will be in form of the rules that the SEC has sent out. Now, it's just like saying the rules of a state is going to change because the judge is being changed. The rules are out, the stance has been made known. You know, the operators in the market are very fully aware of exactly what is going on. So talking about changing the people who wrote those rules we are living by doesn't mean the rules just have to change and it's no more serious as it were.
Now, going back to the market, we're seeing the all-share index testing new year highs. Now, as a fund manager, what is your opinion? Is this the start of a turnaround point?
Well, it's something to keep an eye on. When I came here last, I was just talking about treasury bills and fixed income products having real positive interest rates. And now we've seen that contrasting from year to date to like 364-day T-bill paper contrasted from 17.2, now trading about 15.5 at that last clear at the auction. At the same time, equities markets have just been, I think it bounced about the 21,100 mark twice. But I think last week, I think 22nd of March, it tested at 21,621, which is a new level. Now, from the trough to the peak, the lowest of it was about February 29th, not too long ago. And between that and the peak of that 20, just about 6%. But on the average, looking at it, the T-bill returns, even if you break it down per quarter, because in a couple of days we're going to get to the end of March, it still gives a better positive result than the equities at the moment.
Now, what are the key indices that fund managers are looking out for? I want to, of course, talk about the banking sector. It's earnings season. We're supposed to be seeing it performing quite well, but it hasn't performed as well as we thought it would. So what are the key indices you're looking out for?
Well, right now, given exactly, because you cannot just look at it in isolation, you have to look at it in terms of broader economic perspective. Now, inflation on the rise, so to speak. Just as you mentioned earlier, there's lesser cash in people's pockets due to inflation, higher cost of living and thereabout. So you're going to be looking at stocks that are going to give you good dividend yields. So that'll put cash back into your pocket, and you can fairly safely determine how much in capital gains you're going to get over time. So those are fairly good indices. Dividend yield, stability in terms of corporate governance about the banks, the plans for the future vis-a-vis what they have done in the past. So those are different metrics you will look at. Definitely dividend yield ranks number one. How the companies have been able to manage their costs, because right now we're moving to the era where cost of production is going to be definitely higher. So when it wasn't so high, how were these companies doing way before now? So the cost to income is going to be definitely a metric to keep in view, and how the companies have been doing.
Now, Dayo, I want to ask you, you know, as a fund manager, what do you think about PenCom's recent move to increase limits on pension funds investment in the stock market from 25% to 50%? Now, we do know that pension funds seem to be not so excited about investing in the equity market, of course, since 2008. So what's your opinion, the fact that they now have to raise the limit, start investing 50% of their portfolios?
Well, true of it that the limit has been raised, but what I will get more excited about is the PFAs coming out and doing more. Because when it was 25%, I doubt if we were doing half that much. Now that it's been raised to 50, I doubt if they'll do that much as well. But it is quite important for everyone to quite understand, but because this is our country, because there's been, well, not from my proven analysis, that there's the foreign traders that control about 70–80% of the market. So if they could come out, giving them a bigger bandwidth to play with is quite encouraging, but I wish the PFS would do more in that space.